Imagine holding just 420 shares of Tesla today and waking up a few short years from now to see those shares alone worth over $1 million. That's the incredible potential hidden inside Elon Musk's brand new trillion-dollar compensation plan. This is not financial advice. If you love learning about the future of Tesla, like this video and subscribe right now so you don't miss the next big update. This new pay package is more than a paycheck. It's basically a white paper for Tesla's future. A step-by-step roadmap showing exactly how Musk plans to drive the company to breathtaking heights. The board designed it to lock Musk into Tesla for the next decade and to push him to focus even harder on artificial intelligence, autonomous driving, robotics, and energy. The package sets 12 massive milestones, each one worth about 1% of Tesla stock. To unlock the very first milestone, Tesla must reach a market cap of $2 trillion. Today, Tesla's market cap is around $1.13 trillion, which means the first target requires roughly a double from current levels. The second milestone is $2.5 trillion, the third is $3 trillion, and the final target is a jaw-dropping $8.5 trillion in market value. Along the way, Tesla must also hit key operational goals so the growth is real, not just stock market hype. The board learned from the 2018 plan. Back then, many analysts thought the goals were impossible, yet Musk crushed them years ahead of schedule and unlocked billions in stock. This time, the board added strict requirements to protect shareholders. Musk can only unlock shares when Tesla achieves both market cap targets and operational milestones like revenue, profits, and production numbers. Even after he unlocks the stock, he can't sell it right away. Shares vested within the first 5 years don't actually belong to him until March 3, 2033, 7.5 years from now. Any shares unlocked after the first 5 years can't fully vest until September 2, 2035, a full 10 years out. And even after vesting, Musk must hold the shares for another 5 years before selling. And any large sale requires board approval. These rules ensure Musk stays focused on Tesla's mission and keeps shareholder interests first. The operational milestones are just as exciting as the market cap targets because they reveal Tesla's future direction. Tesla must boost annual EBITDA, earnings before interest, taxes, depreciation, and amortization, from about $15 billion today to $400 billion. A staggering 26-fold increase. Stock prices follow profits, so if Tesla grows profits 26 times and maintains a similar price-to-earnings ratio, the market cap could far exceed $8.5 trillion. The plan also calls for explosive growth in core businesses. Tesla must sell a total of 20 million vehicles, far above the roughly 7 to 8 million sold so far. That might sound ambitious, until you consider the coming robotaxi network. Once owners can add their cars to Tesla's self-driving fleet and earn income, demand for Tesla vehicles could flip from concerns about oversupply to a world of chronic undersupply. Analysts already predict that when robotaxi service launches, buying a Tesla will feel like buying a money-making machine, pushing prices and demand through the roof. Another key milestone is reaching 10 million full self-driving subscriptions. With FSD performance improving rapidly and subscription rates already climbing into the teens as a percentage of vehicles, that target looks achievable, especially when Tesla licenses FSD to other automakers, which also counts toward the goal. As soon as private cars can fully join the robotaxi network, subscription numbers could spike because owners will subscribe to earn revenue. Tesla also aims to sell 1 million Optimus humanoid robots. Musk has already shown rapid progress with prototypes now capable of walking, grasping objects, and even engaging in basic conversation. The latest 2.5 generation robots demonstrate voice interaction and decision-making using xAI's Grok model in the cloud, showing how Tesla's hardware and Musk's AI software company will work together. Musk has stated that annual robot production could reach 1 million units by 2030. These robots are more than a side project. They could become a global labor revolution and a multi-trillion-dollar industry, powering Tesla's valuation far beyond even the $8.5 trillion goal. The final milestone is deploying 1 million commercial robotaxis. Musk believes the fleet could surpass that as early as next year once private cars are allowed to join the network. Robotaxis are key to reaching the massive EBITDA targets because the recurring revenue from self-driving rides will dwarf one-time car sales. To earn the last two milestone payouts, Musk must also secure a qualified successor approved by the board. This ensures Tesla's leadership remains strong for decades. Until then, Musk is locked in as CEO or another top executive for at least the next 7.5 to 10 years. Let's look at what all this could mean for shareholders. The compensation plan grants Musk up to 423 million shares if every milestone is achieved, bringing Tesla's total share count to about 3.645 billion shares. At the $8.5 trillion market cap target, that equates to a stock price around $2,131 per share. If you hold around 429 shares today, you would cross the $1 million mark when those targets are hit. Even if Tesla takes the full 10 years, that represents an average annual gain of roughly 23%. If Musk hits the goals in 5 years, just as he beat the last plan far ahead of schedule, that's an annual growth rate of over 50%. Remember, this plan doesn't cap Tesla's upside. Musk has openly predicted Tesla could eventually reach a $20 trillion market cap once robots, energy storage, and AI services scale globally. At that level, even a few hundred shares today could create life-changing wealth. The purpose of this giant pay package is not to enrich Musk for luxury yachts or mansions. Musk repeatedly says money is a tool for resource allocation. His ultimate dream is to colonize Mars and advance safe artificial intelligence. A massive Tesla stake gives him the resources and voting power to protect the company's AI mission and keep it aligned with human safety. The board structured the plan so that shareholders win first. If Tesla fails to hit the targets, Musk gets nothing. If Tesla succeeds, shareholders enjoy a stock price many times higher, and the dilution is far outweighed by the value created. Back in 2018, skeptics dismissed the original compensation plan as a publicity stunt. Tesla was worth just $50 billion, and analysts laughed at the idea of reaching $650 billion. Musk delivered every milestone in just 3 years, creating immense shareholder wealth. History may be about to repeat itself on an even larger scale. This is why long-term Tesla investors are so excited. Every operational milestone, 20 million cars, 10 million FSD subscriptions, 1 million robots, 1 million robotaxis, points to an unstoppable growth engine in electric vehicles, energy, AI, and robotics. Achieve those numbers, and an $8.5 trillion market cap becomes a stepping stone, not an endpoint. If you're holding Tesla stock or thinking about buying, understand that this compensation plan is more than a headline. It's a public blueprint of the company's next decade of domination. Tesla is telling us exactly what it intends to do and rewarding Musk only if he delivers. Like this video and subscribe now so you don't miss the next big Tesla update, because if these milestones unfold anywhere near Musk's pace, the coming years could redefine what we all thought was possible for a single company, and for every shareholder bold enough to stay the course.